So it's go time. All right. Anyways, let's get started. Today, we are going to be talking about how to, I guess, come up with daily bias live. So here we are. It's Monday of June 8th. Okay, give me 1 second while I pull up Forex Factory just so we can get accurate representation on this bitch. Don't want anybody to feel mal-representative. Wait, what? Oh. Sorry, July 8th. Damn. Okay, so here we go. We have a no news Monday, okay? So, and on top of that, we've got Powell speaking on Tuesday and Powell speaking on Wednesday. So, I'm not going to be trading on Tuesday or Wednesday. Oh my God. Literal, like, child predator week if you're an underage trader. Powell speaking on Tuesday, Powell speaking on Wednesday, CPI... Oh! And then PPI on Friday. So a no news Monday with a high impact news week typically doesn't really give you shit in the market. Okay, so that's one thing that we want to keep in mind. Okay, so I'm pretty much just going to give you guys like how I find my daily bias live for a day like today. It's 8:41 a.m. right now. It's July 8th. Okay, and this is what the market's looking like right now. So we already filled in this new day opening gap and this new week opening gap. So boom, we have, this was the daily open from today. This was the close from Friday. This was the open. As you can see, we closed up here. We opened down here. We immediately fill up that big juicy gap. But overall, we look pretty bullish. Okay, we did come down into this bullish fair value gap. Fill it. And we're getting some legs up here. We're pushing right past this high. Okay, my main thing would be, okay, I'm looking for either a retrace or a sweep of liquidity on the hourly time frame. Do I think this 4-hour extension is up yet? No, I think we can definitely go higher than these highs because, again, if we're assuming that this is going to be bullish market structure, continue making higher highs and higher lows, we're going to need a little bit more of an extension past this high. Okay, so with that in mind, I'm going to be pretty bullish today. However, does that mean I'm going to force a long or try and force a trade? No, because I have to keep in mind that it's a no news Monday on a high impact news week. We're probably going to have very low volatility today and very low volume within the market. So with that being said, I'm going to go ahead and mark out market open right here. Okay, and as we can see, we're taking out these previous swing 4-hour highs. What that's going to help the market do is there's going to be some profit taking off of these highs, ideally some profit taking off of these highs, to give us one of two options, okay, for us to either come down to fill in this 1-hour fair value gap to give us longs higher and higher, or for price to get profit taking for us to come down and sweep out this hourly draw on liquidity right down here. And then on top of that, we could go even further to come down into this hourly draw on liquidity right here off of this profit taking. Okay, so those are really my 3 highly executionable price ranges that I would be looking for today. Again, does that mean I'm going to take a trade? No, I need to see how market reacts after market opens. And again, this whole bias could change because we could end up ripping up, making some sort of price action right here that we end up coming down and sweeping for legs higher. Okay, this is just how I'm seeing it right now. Okay, so no news Monday. Powell speaks on Tuesday. Powell speaks on Wednesday. CPI on Thursday. PPI on Friday. And a dick in my ass on Saturday. How about that? Okay. So for what I'm seeing right now, highly executionable areas to take a trade. I'm assuming that this is going to close so that we actually do form this fair value gap. Obviously, we have 15 minutes left until that happens. So we have this price range right here. We have these lows on the hourly time frame right here. And then we also have this hourly fair value gap. Those are my 3 highly executionable price ranges to start looking for longs. So how do we break this down? Let's go over the step by step, right? First thing that I always do is I check the news to kind of get to see when I'm able to take a trade, right? Because if there's news at 10 a.m., I'm not allowed to take a trade until after news comes out and I see what it does. There's no news today, so I'm able to trade whenever I want. Most of the time I take a trade after 9:50. Okay. Boom, we established that. From there, what did I look at? I looked at the high time frames. Okay, I saw that, hey, we have our weekly analysis. We had a new day and new week opening gap that just got filled. Okay, we pushed up to fill it. Okay. On top of that, on the 4 hour, now we're going into the 4 hour, we're continuing bullish market structure. We filled in this fair value gap. This is balanced out price action now. Price has made its extension up and it's pushing past these highs. In order for this to confirm that it's still going to continue higher and higher and higher, we're probably going to need this extension to go a little bit higher than just this poke above these highs, which leads me to have a bullish bias because I don't think that this extension is done yet. From there, what did I mark out? Okay, so I've established my daily bias is bullish. Scale back down into, okay, where are we going to be looking for entries? So I have my overall bias of where I think the market's going to go for the day. Now I have to look, where am I looking to enter on the day? Okay, I have this highly executionable price range. I have this high time frame draw on liquidity, and I have this highly executionable price range. Imbalance, liquidity, imbalance on the high time frame. From there, what am I going to do? I'm just going to take both of my hands, shove them inside of my ass, and I'm going to wait until these highly executionable price ranges get hit. And I'm not going to do shit until they get hit. And once they get hit, what am I going to do? I'm more than likely going to scale down into the 1 minute time frame, and I'm going to look for confluences on why I should go long, such as this imbalance getting filled, potential break of structure or inverse fair value gap, and then after that, fair value gap, equilibrium, or order block entry. Or I'm going to be looking for this draw on liquidity getting swept, and then from there, what would I be looking for? Break of structure, inverse fair value gap, followed by fair value gap, order block, breaker block, equilibrium, entry. Or I'm going to be looking for this 1 hour fair value gap to get filled. And then what am I going to be looking for following that? Break of structure, inverse fair value gap, followed by fair value gap, order block, breaker block, equilibrium, entry. That's all that it is. And you're probably saying, well, how do we know which one we're going to enter off of? Well, you just fucking wait for it! Okay, if price comes down into this fair value gap and it doesn't give you a break of structure or an inverse fair value gap followed by a fair value gap, breaker block, order block, or equilibrium entry, then you can't fucking enter. So you're going to wait for this one. If this one gets hit and we get jack off time, break of structure, break of structure, jeez. If we get a break of structure, but no fair value gap, oh, you're not going to fucking enter. If we come into this fair value gap and we get, oh, inverse fair value gap, edge maxer, followed by a order block getting filled and rejections to the upside, what am I doing? It's sticky, it's white, it's creamy, it's warm, and it's all over my screen. I'm pressing long. And that's how you find your daily bias. Thank you guys. We're going to continue ripping YouTube videos. Hopefully that helped you guys figure out how to actually like break down how to find daily bias overall, right? We want to look at the high time frames, find out where we want the market to go overall. From there, we find highly executionable price ranges. From there, we go down into the lower time frames and we execute. 3-step process. Overall, where do we want the market to go? Lower time frame, executionable price ranges, and then you execute. 3, 2, 1, spank my little bum bum. Okay? Appreciate you boys. We're gonna keep ripping these YouTube videos. Give me a fucking like, give me a fucking subscribe. We're not stopping until we hit 500,000 subscribers. Kind of crazy, but we're gonna do it. All right, I love and appreciate you boys. I'll catch you guys in the next one. Peace out.